Crypto Caesar Capital. Hope you're well. It's the 23rd of October 2023, and I'm going to do a short video on crypto portfolio management, balance of risk, and diversification. I mean, this is something that a lot of people don't really get when it comes to crypto investing. A lot of people who come into the crypto world, no fault of their own, don't really have any experience in traditional markets and investing. They probably never spoken to a portfolio manager. They don't understand the Sharpe ratio, for example, and things like that. And, you know, sometimes their portfolios can be a mess. So hopefully this video might help those who are a little bit confused as to what sort of allocations they should be allocating to each asset, etc. So let's take a look. So let's consider the background first. Okay, let's consider what the position is at the moment in the crypto market and whether now is a good time to be looking to take positions in cryptos. Well, the first thing we know is that institutions are coming for crypto. There are so many spot Bitcoin ETF applications. I did a video on this. You can go back and look at that video. And the total assets under management of firms applying for spot Bitcoin ETFs is currently about 17.7 trillion US dollars. Now, I think that's actually increased to possibly $30 trillion, but the last time I looked, it was 17.7 trillion, so we'll go with that. And the other thing as well is that my strong opinion is that once a Bitcoin ETF is approved, I think within a financial quarter or so, an Ethereum ETF will likely follow. The other positive thing about the space and looking at the backgrounds is that regulations are getting better, accounting rules are getting better for corporations, and this is really going to attract big corporations into the space. So in my view, you know, crypto will become more and more common in the average place or the average person's portfolio. Of course, Bitcoin is now, because it's traded on a futures ETF, is considered an institutional asset. I don't think that there is any argument against that, really. And I think a lot of fund managers will be arguing at the moment that soon, or even maybe now, it will be the fiduciary duty of a fund manager to be adding crypto to the standard 60-40 portfolio. Now, the standard 60 portfolio, we'll have a look at that in a minute, but what the standard 60 portfolio is essentially 60% equities, 40% bonds. So different types of bond, different types of equities, all bundled together. That's the classic 60-40 portfolio. And interestingly enough, Bitwise did a study which showed that adding 5% to a traditional 60-40 portfolio made a staggering difference. And we can see this Bitwise study here. They were looking between the 1st of January 2014 to the 30th of June 2021. And you can see to the top left of the box, a traditional portfolio, the cumulative return was 74.72%. Okay, the Sharpe ratio, if you look to the right, was 0.609. Okay, now the Sharpe ratio is punished to the downside if there is volatility. Okay, so the higher the Sharpe ratio, the better. And you can see when you look through that box that just by adding 1% of crypto to a traditional portfolio increased the annualized return by over 1%. I mean, that's pretty amazing, isn't it? Just by adding crypto. Now, when they say crypto, they mean Bitcoin, but when adding 1% of Bitcoin to your portfolio, the annualized return increased by 1%. And interestingly enough, the Sharpe ratio went up. So the higher the Sharpe ratio, the better. If you don't understand the Sharpe ratio, I suggest you go away and consider the Sharpe ratio. But essentially, the higher the Sharpe ratio, the better when investing. Now, if we go right to the bottom of the box there, 5% of Bitcoin to a traditional portfolio over this period of time, in fact, increased the annualized return by almost double, okay? And the Sharpe ratio went up to 1.055. and you can see the maximum drawdowns between each other, that there isn't really much of a huge difference. So in fact, the volatility came down and the annualized return increased. So that's really, really positive. Just by adding 5% of Bitcoin to a standard 60-40 portfolio, 60% equities, 40% bonds, in fact, increases your Sharpe ratio and increases your annualized return. So this is why a lot of people are arguing that it will be a fund manager's fiduciary duty to add a small amount of Bitcoin, maybe 5%, maybe 10% Bitcoin, to a standard 60 portfolio. And you can see here how they performed. You can see the 5% allocation in blue at the top, coming in about 156%, and you can see the traditional portfolio in orange really, really underperforming. So, you know, I mean, it's obvious now, in my view, that crypto is going to be added to the 60-40 portfolio. And I think that that's going to happen very, very soon. As soon as this ETF or the ETFs are approved, then fund managers, in my view, will have a fiduciary duty to consider adding at least Bitcoin to a standard 60-40 portfolio. So, obviously, you've decided, because you're listening to this channel, that you are now going to be a degen. You're going to add crypto to your portfolio. So the things you're going to be considering is, how many assets should I buy? What allocation should I give to each asset? How much should I spread my risk? Should I add Bitcoin to my portfolio, etc.? This is a pretty stressful situation for a lot of people, because they don't understand how much of Bitcoin or how much of Ethereum, etc., you should add to a portfolio. But when it comes to the diversification of risk, Peter Bernstein said something quite significant in my view, and I think he kind of hit the nail on the head. He said, diversification of risk matters not just defensively, but because it maximizes returns as we expose ourselves to all of the opportunities that there may be out there. So what Peter was essentially saying was, don't put all your eggs in one basket, spread the risk, okay? Because diversification is key, as I said right at the beginning, to a balanced and winning portfolio, because it lowers your risk to one asset's downside volatility, whilst at the same time exposing you to another asset's upside volatility. So a balanced portfolio essentially will help you sleep at night. But the the key is therefore to find a portfolio that suits you, because low risk removes emotions, whereas high risk increases emotions. So everybody is different, and everybody will be suited to a different type of portfolio. So how will your crypto portfolio look? Well, as I just said a moment ago, every investor is different. Some are risk averse, while some welcome risk. And you've really got to find a portfolio that suits you and your risk tolerance. What is your risk tolerance? Everybody has a very, very different risk tolerance, you know, and there are certain things that you want to take into account when considering risk tolerance. For example, your age, whether you're a person or a company, your experience in the market, for example, and your ability to remain in position. Your ability to remain in position is obviously quite an important factor, because really you should be able to remain in a position for a significant period of time, as in years rather than months. So really, it's only you who can decide what your risk tolerance is. But let's consider some portfolios that might assist you on your journey when considering different sorts of allocation. So the classic, and this is the risk averse portfolio, this is the one for people who don't like too much risk. They've got a standard 60-40 equities bonds portfolio, and they're ready to add a little bit of Bitcoin to their portfolio, but they don't want to really add too much. But you can see from the Bitwise chart that I showed you in the study that I showed you a moment ago, just adding 5% of crypto or 5% of Bitcoin over a period of time is really going to make a massive difference to that 60-40 portfolio. So this is a bit of a boring one, but it's for some people who, you know, they don't really understand other types of crypto, but they've heard enough and know enough that they're happy to, you know, put at least 5 to 10% of their assets into Bitcoin. And whilst obviously I note at the top of the slide here that this portfolio is lower risk, what you're not doing, unfortunately, is exposing yourself to the potential upside volatility of other crypto assets. And of course, as you all probably know, the rule of diminishing returns seems to be working well with Bitcoin at the moment, in that in every cycle, its returns are not as much as the previous cycle. So therefore, the returns are diminished. So from a risk reward standpoint, it might be better to add some other crypto assets to your portfolio. But, this might work well for some people who, for example, just want to buy 5-10% allocation to Bitcoin in their 60-40 and just sit on it for 10 years. This would be a perfectly good portfolio to consider doing that. So this is what I would call the institutional portfolio. I speak to a lot of fund managers, etc., hedge fund managers, and this is the sort of portfolio they generally look at. The reason why is because it has the best Sharpe ratio with Bitcoin and Ethereum in crypto, really. So you're maximizing your risk-adjusted returns. It's less volatility, but you're getting a good return. So it's 75% Bitcoin and 25% Ethereum. And that essentially is around about the best Sharpe ratio that you will get in crypto. Could be about 70-30, I think, but I like 75-25, and most of the fund managers I speak to like 75-25. And this really does do well, and it's the best Sharpe ratio really in crypto that you could probably find. So this is another potential portfolio you could have. Again, you're taking up a little bit more risk here. You're 50% Bitcoin, 50% Ethereum. There will be more volatility. There will be more risk. And of course, the Sharpe ratio will go down as the volatility goes up, because the Sharpe ratio punishes or deducts points for volatility. But, again, this is another good one that somebody could feel quite happy with and sleep at night and not really understand a huge amount of crypto and what to do and different sorts of altcoins you can buy. This is a kind of a really standard, easy type way forward as a portfolio is. And of course, this is a portfolio that you could, again, sit on for many years. Okay, you could sit through several cycles with this sort of portfolio, because we know that Bitcoin is likely to do well over time, and we know Ethereum will likely also do well over time. Okay, well, this is the next slide. This is what I would call the alpha portfolio, and this is the portfolio that I like the most, and this is essentially the way that my portfolio will look come just before the Bitcoin halving. And it's 50% Bitcoin, 25% Ethereum, and 25% in altcoins. Now, we've spoken about Bitcoin, Ethereum. Let's talk about the alpha in this portfolio, the 25% in altcoins. What I prefer, and this is my perspective, I'm not advising you because I'm not your financial advisor, but from my perspective, with the altcoins, I prefer 5 blue chip projects and 5 new projects. Okay, so that makes up 10 in total cryptocurrencies within the altcoin section, or the alpha, the 25% alpha part of the pie. The blue chips are altcoins that I would consider in the top 25 that have fared at least one Bitcoin cycle, not including stable coins, of course. But if a coin has fared at least one or potentially 2 Bitcoin cycles, and it's still going and it's still in the top 25, in my view, that shows strength within that altcoin, and therefore I would be interested to continue to invest in that particular altcoin. So 5 in blue chips, and then the remaining 5 in new projects. Okay, and new projects, I would say, are altcoins that haven't experienced a full Bitcoin cycle. Okay, so if they haven't, experienced a full Bitcoin cycle, then there is still a lot of ability for them to move very steeply or parabolically to the upside. That is where really your risk is, because some of these altcoins might go to 0 or just zombie out. Some of them might do 100x or 50x or whatever. but that will balance your portfolio, because if you have, you know, 5 blue chip altcoins which you think are going to do fairly well, which probably will do fairly well, you've still got your other 5 which you're taking on a lot more risk with, and you can afford for some of them to zombie, but the other one might perform by, you know, 100x or something, or 1000x or whatever, you never know. And that will really balance things out for you and allow you to experience that volatility without having too much exposure to it, because you've still got a solid position in Bitcoin, solid position in Ethereum, but you've got this position, smaller position in a particular altcoin or altcoins, which you are opening yourself up to the volatility. I would say, in relation, just lastly on this particular slide, this alpha portfolio, in my view, for me, this works best as a cycle portfolio. So I would just hold this position through a bull cycle. So I'd probably end up killing my alpha positions, and then, you know, taking profit on the Bitcoin and Ethereum, and then re-entering at a later date. So this isn't really a portfolio I would say that you should hold over time, because you're opening yourself up to way too much risk with the altcoins. But this is a portfolio, certainly, if you are a fairly sort of, not a seasoned investor, but someone who kind of knows their way around the crypto market, someone who doesn't need a portfolio manager or somebody to buy and hold their Bitcoin, etc. Someone who knows how to buy crypto assets, someone who knows how to store them and knows a little bit about the market. I think this is probably the best kind of portfolio, certainly for me anyway. And again, I say everybody's different. Everybody has a completely different style to their risk tolerance. Okay, next one. So this is the same as the alpha portfolio, but it's taking on slightly less risk. So this might be someone thinking, well, I'm happy with the Bitcoin position. I want a little bit more Ethereum because I want to take some risk there, but I don't want to take too much risk on the alpha because, you know, I haven't got time to keep track on the market all the time. And I just don't want to take on that risk. But at the same time, I still want some exposure to the potential hard, you know, parabolic upside of the altcoins. And again, you know, you could have 10 different altcoins, 5 blue chip, 5 new projects, see how you go there. I mean, you don't necessarily have to have 10, you could have 20 if you want, but the more you have, the more you've got to manage and the more stressful, essentially, it's going to become. Okay, so closing thoughts. Firstly, we know institutions are coming for crypto on a massive scale, and this, in my view, is now the time to start considering people should start considering to add crypto to their portfolio. And we can see from the slides right at the beginning, just adding 5% of crypto to an overall 60-40 portfolio makes a significant difference. You know, as I've said right at the beginning, there is no one portfolio that suits all. Everybody's different. Everybody has a different risk tolerance. Everybody has a different amount of money to invest. You know, obviously, the higher your allocation, the lower risk you should be taking, really. If you're only investing a few $1,000s, then you might want to just treat it as going to the casino, basically, and spreading your risk across lots of different altcoins and see what happens. But essentially, the point is this: everybody's different. You really have to consider what your risk tolerance is and how you want to play this market. But take it from me, if you play this market in a smart way, okay, then you will get pretty good returns, okay? But you've just got to be smart about it, and you've just got to balance that risk. So I hope that helps. I hope that you enjoyed the video. Like and subscribe as usual. If you want to join the VIP group, please either contact me through email, through the website, or probably even better, contact me through Twitter, and you'll certainly get a quicker response. But we try to respond within a few hours either way on either communication level. So that's it. Hope you have a good day and enjoy the rest of the day. Thank you very much for listening. Take care. Bye-bye.